Welcome back to the continuation of this series on investor psychology. This is the second part of this really important part of investing and trading. So in the first video, we had a look at the aspects of the most successful investors, that they treat investing like a business. They're prepared to step outside their comfort zone. They take personal responsibility for their results. They recognize that they need a support and a mentoring group over a period of time to actually become accomplished at this, and they manage to overcome their fear and their lack of confidence because of the uncertainty of the market. So in this video, we're going to take a look at the key mistakes that investors and traders make, some very practical exercises to upgrade your mindset, and then we're going to have a look at what the transition from bull markets to bear markets and back to bull markets actually looks and feels like, as a precursor to then moving on and looking at how we actually identify some of the best businesses. So some of the key common mistakes that traders and investors make is that they buy after stocks rise significantly. Now that's a natural thing to do because we like to be in step with everybody else, and it's not until the news becomes really positive that people actually start talking about the stock market, and that's when most people tend to get into the market. So it's quite normal to want to buy stocks after they've risen significantly, but often it's the worst possible time to be doing that. The second thing is that they often buy through what I call fear of missing out. In other words, they're looking at prices going up and up and up, and they're getting more and more stressed out by the fact that they're not involved, and so they throw out rational decision making and consideration of values, and they start wanting to buy because they're fearful that they're going to miss out on the next bit of rise in the market. Most importantly, they don't have a plan for small losses. Losses in the stock market are absolutely inevitable, but you must have a plan for knowing how you're going to deal with them. Now, the start of a bull market is where you really make money over the medium term, where you really make big money over the medium term. So it's worthwhile identifying what the start of a bull market actually looks and feels like, and also having the patience to be able to wait until those circumstances arise. Now, there's some practical things that you can do to help you along the way. First one is just sit down and imagine yourself in 12 months' time as a consistently profitable trader. What that feels like, what impact it would have on your lifestyle. So write it down. Write down what you feel and how it would impact your lifestyle. Then the next thing to do once you've done that is to actually write a statement about what it takes for you to reach that point in 12 months' time. And you need to identify specifically what it is that you'll do. Now, as an example, here's a statement that I use, and it's one that you could perhaps use as a basis for framing your own statement. So I play by the rules of the market, and I never waver from my own rules. I have no fear of losses because I keep them relatively small relative to the winners. I manage my money so that it is working in the best positions to maximize my returns. And by doing this, I know that I'll make money because the best traders and investors around the world have already done it in previous decades. So if I just do what they've done, then I should be successful. So that's an example that you can use as a basis, but frame your own. It's so important that you do this. Now, just writing it down once is of virtually no use at all. You need to read it every day. You need to do it in a quiet place, and you need to do it in a way that allows you to actually absorb the meaning. Don't just read it and think, okay, that's done, and then put it aside. Actually absorb the meaning and spend 30 seconds just thinking about it and reflecting on what the words mean. So if you combine that with a clear written plan and clear written goals, then you will start to develop the mindset of winning traders. And once you've got a positive mindset, then it becomes a positive feedback loop. If you don't have a positive mindset, it's almost impossible to set up that positive loop, and that does impact on your trading and investing decisions. Now, your mindset shouldn't be about what the market is doing. A lot of people stress about whether the market's going up or down, whether the news is good or bad, but none of that actually matters. What you need to do is just to focus on making money by following your trading rules. Providing your rules have been framed effectively and they're likely to lead to a positive outcome over time, then your job is to follow those rules. Now, it's really important to know what your ideal trade looks like, and most people don't know how to do that, so you're probably going to need some assistance with that in being able to identify exactly what the ideal trade or investment is for you. And then it's just a matter of waiting until it comes along. You know, this is not rocket science. You've just got to be very clear about what you're trying to achieve and then basically wait and execute when the time is right. Now, just having a look at what the top of the market feels like, because these signs are actually really important to understand to become a successful investor. So the top of the market, the media is always at its most positive. Everything you read is positive about how the market's going up, and the economic times are really good. And people who aren't normally interested in the market are talking about it. The next time you hear a taxi driver giving you a tip for the stock market, you know that it's probably time to get out. Or when a broker rings you with the latest sure thing, the only reason the broker is ringing you is because he's probably running out of buyers to buy the stock at that particular price. And people are looking to start to sell at that level. The smarter money is looking to get out. So the overall feeling is one of euphoria. And if that's what you're seeing and that's what you're feeling, then it's definitely time to sell. Now, at the other end of the spectrum, what does the bottom of the market feel like? Because this is where the major opportunities come from. This is when you can make the majority of your wealth in a very short period of time. So most people are despondent at times like this, and they have vowed to stay away from the market forever. The economic news is normally terrible. Everything is doom and gloom. And no one wants to talk about the market. It's the last thing that anyone wants to talk about. So this is generally a really good time to buy, and this is when you should be looking for opportunities. Now, in the next video, which is leading on to some of the key principles of investing, I'm going to be looking to explode some of the investing myths. And these myths severely hold people back from becoming wealthy in a much, much quicker period of time. And in fact, some of them hold people back permanently. They never achieve the wealth that they want to. And the second part of the next video is I'm going to start to unravel how we go about finding the best of the best businesses. Not just the big mainstream names that just plod along year after year, but the very best businesses that are available in Australia that produce absolutely above average returns. And they can dramatically accelerate your wealth building. So until the next video, cheers for now.